Today is Tuesday, October 1st, and this is another update on my progress, beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I sold 25% of my position in both Apple and C3 AI. I also trimmed 20% from my Nvidia and also my Tesla positions. Apple, Nvidia, and Tesla have all been doing very well lately, so this was just more or less taking some of the profits and also raising my cash on hand in case the market has a slight downturn. And then I trimmed the C3 AI position because it's in the red right now. I wasn't going to close out of it entirely because I still have confidence that it is going to recover, but I did want to make it less of my overall portfolio. This is what the chart for AMC looks like right now, which is one of the positions that I'm short. So this green circle represents where I opened up my short position, which was going to be September 25th. A couple of days later, AMC announced that they were going to be raising $153 million by issuing new shares to pay off outstanding debt. AMC initially showed some gains and it even reached the 5-day moving average, but has since fallen below it. And I am going to keep the position open because I do think that it's going to end up going lower. This trade essentially does have an expiration date. AMC reports their earnings towards the beginning of November, and usually whenever they report their earnings, it's followed by high volatility. When they reported their earnings last in August, nothing really happened, but when they released their earnings in May, the stocks are 135% increase. So for that reason, I'm definitely going to close out of this position sometime in October. This is what the SPY chart's going to look like right now. The S&P 500 saw slight gains on Monday before ultimately retracing back and going lower today. Right now, the price sits between the 5-day and the 15. As long as the 5-day can remain above the 15, I don't think that there's that much to worry about. But out of precaution, I went ahead and trimmed those positions I was referring to earlier in case we get another situation like this. And then this dip as well towards the end of July that only ended up lasting for a couple of days, which is why I'm raising my cash on hand, because when dips like that happen, they've been short lasting and they show strong recovery not long after. So I want to make sure that I'm in the position to capitalize on an opportunity like that. This is the first page of all my current positions, which is showing 13 out of 18. Right now, General Electric, Amazon, Spotify, Costco, and Google are going to make up my top 5. And those are going to make up 30.13% of my portfolio. Everything's pretty much exactly the same, doing very well for the most part. Microsoft and Amazon both slightly slipped into the red. Google has also made some slight gains. Right now, it's only 3.38% in the red. I don't have any plans to increase any of my positions quite yet. I'm going to wait and see what the market does over the next couple of days to see if it's going to have one of those dips that I was referring to. And this is the second page, which is showing my remaining 5 positions. Right now, I have 80.56% of my portfolio invested with 19.44 sitting in cash. I also don't believe I'm going to trim any more of my positions to raise any additional cash. Having right around 20% is exactly where I want to be right now. Since Monday, my portfolio saw a decline of 0.16. The S&P 500 went down 0.5 and Pershing Square had a loss of 2.69, which is going to bring us year to date. Right now, my portfolio has a 21.65% gain. The S&P 500 has a gain of 20.37 and Pershing Square on the year has a gain of 4.31. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and I'll catch you on Sunday.